What's going on, team? It's Caddy with Money Investing. I hope that you all are having an amazing day. So in this video, we will be comparing the Nasdaq with the Dow Jones and the S&P 500 and kind of understand where the overall market indices are going, what the overall trend looks like, and where do I personally see the markets going next week. Now, before we get started, if you guys enjoyed this video, please make sure to drop a like because it really supports the channel and recommends this video to other people who might be interested in watching. Also, subscribe and hit that notification bell so you don't miss out on any future market updates and videos related to investing and technical breakdowns. Make sure that you hit that notification bell because these videos are going to be packed with some really important and interesting data points and charts so you don't miss out on any future market updates. So in this video, we're also going to talk about 5 charts that I've put together for you guys. They're really interesting data points that I feel like everyone should be aware of when it comes down to the cases, the volatility index, the consumer sentiment, and also the bear market checklist that Citigroup put together, and also kind of like the zombie companies that we will talk about. That was a report and a chart put together by Deutsche Bank. Again, if you guys enjoyed this video, please make sure to smash that like button. So right now we're looking at the S&P 500 at the very bottom, the Nasdaq in the middle, and the Dow Jones at the very top. Again, they are trading at different levels at different points, which is why they are at different levels on this chart. S&P trading at just about 3,009. Nasdaq did dip below its 10,000 level, and the Dow Jones is right around 25,000. Now, if you guys didn't get a chance to watch my video on the Dow Jones, and I constantly post updates on the S&P 500, I would highly encourage you to watch those as well. But I essentially put a fundamental value on the Dow Jones at around 27,500 based on the fundamental analysis and the DCF models I built for the underlying 30 companies. So based on those values, I derived a fundamental value for the Dow Jones at 27,500. But again, that depends largely on the 12-month trailing free cash flows for the underlying 30 companies. And in 2020, a lot of them have seen a significant decline in sales and revenue. So we will see how these companies perform over the next 2 quarters at the second half of the year. But that being said, the markets have essentially rallied from their March lows, which was right around here. If I were to put a line right there, you guys can see that S&P has pushed up close to about 39 to 40%, with Nasdaq jumping over 42%, and Nasdaq is very heavily weighted in the tech sector. So a lot of the tech companies are included in Nasdaq, which is why it has been a little bit more aggressive than Dow Jones and the S&P 500. And Dow Jones pushed up close to about 39 to 40%, similar to the S&P 500. Now, moving forward, you guys can see that the trend has been a little bit on the bearish side because the patterns have started to make lower highs and lower lows. More specifically, the S&P 500 and the Dow Jones, you guys can see that it's now pushing downward. As far as the Nasdaq goes, it's not doing the same exact thing as the S&P 500 and the Dow Jones. It's still a little bit stronger than the other 2 indices. Now, that being said, I have performed separate technical analysis on the S&P 500 and where those key support resistance levels are going to be. But for the purpose of this video, we will do a quick technical analysis on all these major indices. So for the Nasdaq, right now we can see that if you were to put a trend line right around this level, which is going to be around 9,700, it can potentially act as a next support for the Nasdaq. And the reason being is because if you were to pull back to February, that's also the resistance for the index. If it were to break below the 9,700, then I do see the pattern going as low as 9,500, which has been the low from June 11th, and which will give us a drop of close to 1 to 1.5%. Moving forward for the Dow Jones, you can see how it's been on a descending pattern, making lower highs and lower lows. And the next support level for the Dow Jones I see as going to be at around 24,600. And the reason being is that's also been an area of consolidation for the Dow Jones, and it's been consolidating right around this level, essentially making double tops and consolidating right around that level. Again, an area of resistance for the Dow Jones, which can potentially start acting as a new support, which is going to give us a drop of close to about 1 to 1.5% from its current levels of 25,000. For the S&P 500, again, I've done a separate analysis on where I see those support and resistance levels to be, but for the purpose of this video, I will quickly go over what those levels are. So in my opinion, I feel like the 3,000 level is going to continue to hold its support, which we have seen more recently back on June 11th. So the S&P is approaching that level, and it has been making lower highs and lower lows. You guys can see that it's been going down and has a descending pattern in the last few weeks. So I do see the pattern essentially validating this support before pushing up to its lower high, which will potentially be a drop of close to about 35 to 40 basis points before it reverses back up to its lower high of 3080. Now, if the pattern were to break below this level, then I do see the pattern going as low as 29.40, which I've already mentioned in one of my previous videos, 29.40 to 29.50, which can be a drop of close to about 1 to 1.7%. So now I'm going to talk about 4 to 5 charts that are really interesting to look at. So the first one is going to be related to the zombie firms in the United States, and that's essentially going over the rising share of companies with debt servicing costs that are higher than their profits. That just goes to show that any company who wants to raise money financing through debt, and these companies have significantly gone up in value. Close to about 20% of the firms in the United States are now being labeled as zombie companies, essentially meaning that their debt and servicing cost for that debt is much higher than the profitability of the company. So in reality, the businesses that might be failing are being propped up because of the liquidity that they're providing to these firms. So it's just a data point that I wanted to bring to your guys' attention. So the next chart I want to talk about is going to be the growth in the number of COVID-19 cases versus the volatility index. So as the number of countries with a higher than 5% growth rate in the daily number of confirmed cases grow each day, the volatility in the market grows with it. So this chart goes back as far as January of this year, and you guys can see how and when these number of cases were increasing, so did the volatility in the markets. Now we have seen more recently that the cases are growing at a really significant rate again, which can potentially signal that the volatility might come back into the markets. And we did see the volume, the T-vol indicator, or the total volume in the markets, spike again, close to about 3.5 billion shares being traded last Friday and also the Friday before that. So just something I wanted to address in terms of the number of cases and volatility. And the next chart that we are going to go over is going to be related to the S&P 500 index itself and also the consumer sentiment or the consumer confidence. So you guys can see that the white line represents the S&P 500 index and the red line represents the consumer confidence, and they've never been this disconnected with each other, with consumer confidence to a really low level, with the S&P 500 near all-time highs. That just goes to show how much of a disconnect there is between the consumer sentiment and also the stock market in general. So last but not least, I wanted to share Citigroup's bear market checklist, and this essentially goes over how likely we are to see another bear market. And you guys can see they are giving a 30% warning for a bear market compared to previous recessions. Going back as far as 1990s, when there was a 69% warning for a bear market, compared to 2000 when there was a 89% warning for a bear market, and then compared to the 2007-2008 global recession, they gave us a rating of 55%, which were significantly much higher than what we're seeing now, which is just about 30%. But the interesting thing to look at is the total warnings in terms of numbers are very similar to previous recessions, with right now being 20 compared to 2007 also being 20, and 2000 there were about 19, and 1990s there was about 16 warnings that there was going to be a bear market. Now that being said, most of the warnings right now are more on a macroeconomic level compared to the sentiment or valuation or profitability or balance sheet levels. But that being said, one has to see both the amber and the red signals combined readings above 50% to become very concerned about an imminent bear market. And right now we're showing at 30%. And this again is going to be the pulse monitor, which I wanted to address and bring to your guys' attention just so you have a better understanding. So I hope you guys enjoyed this video and my quick technical breakdown on these 3 market indices, and also the breakdown on 4 to 5 different charts that I wanted to bring to your guys' attention, which I felt like really interesting to look at and something really to consider moving forward. Now I will still be posting the S&P 500 futures update tomorrow night when the market opens at 6 p.m. if we are able to get 500 likes on this video. If we can get 500 likes on this video before tomorrow at 6 p.m., I will be going live and I will share my opinion on the markets tomorrow when the futures market open, and I will also be doing technical analysis and creating a watch list for all the other stocks that you guys are interested in, and I will share my opinion of those stocks as well. If we can hit 500 likes on this video, we will start going live starting tomorrow at 6 p.m. and we'll break down the futures market, and then we'll also look at different stocks moving forward into next week. Again, if you guys enjoyed this video, drop that like button, subscribe, and hit that notification bell so you don't miss out on any future market updates and videos related to investing and technical breakdowns. As always, happy investing, and I will see you guys in the next video.